Hi, Maria Shanahan, ERA Home Run Real Estate. If this is your first time watching one of my videos, please consider subscribing to my channel. I try to do a video weekly and I talk about all things related to real estate and specifically vacation investment properties. Today, I'm going to talk about cap rate. What is cap rate? How do you calculate cap rate? And how can you utilize cap rate to decide whether or not this is a good property to purchase? First of all, cap rate. It is actually a measurement that we utilize to determine the potential rate of return on an investment. It is the ratio of the property's net operating income to the property's asset value. Net operating income, you may ask, what is that? That is how we calculate cap rate. We take that and we divide it by the current market value. So the net operating income is calculated by taking all of the income the property generates annually and subtracting the annual operating expenses. I'm going to show you a very simple example to illustrate how to calculate cap rate. If you have a property with a value or a sales price of $175,000 that brings in monthly rent of $1,950 with taxes of $200 a month and an HOA of $250 a month, we are going to show how to calculate your net operating income and then your cap rate. So the income, $1,950 a month times 12 months for $23,400 annual income. Your monthly expenses of $200 a month for taxes and $250 for HOA for $450 a month times 12 months in the year gives us $5,400 in annual expenses. Your net operating income is simply taking that total income of $23,400, subtracting your expenses of $5,400 to come up with $18,000 in net operating income. We already said the sales price was $175,000, so our net operating income of $18,000 is divided by the sales price, and that gives us a cap rate of 10.28%. Now, how are we going to utilize this number? Usually, just like in the stock market, when you make an investment, the higher the cap rate usually means the higher the risk. The lower the cap rate, means a lower risk. So when you're considering this cap rate number, you have to take into account other factors. There isn't just a one size fits all, this is a great cap rate, I should buy the property. You have to look at other things like the actual inventory in the area, the actual type of property, other tax advantages you may gain by purchasing this property, and the purchase price. Usually between 4 and 10% is considered a good investment, but the cap rate is not the only factor that should be taken into account. So I discussed what is the cap rate, how to calculate it, and the factors you need to use along with cap rate to decide whether or not you are going to purchase. I hope you enjoyed the video, and please consider subscribing to my channel. If you click on the little bell, that will notify you when I post a new video. I try to post weekly. I look forward to seeing you next time. Happy investing.